Welcome to the Asgard Annual Members Meeting for the financial year ended 30 June 2021. My name is Matthew Rady and I'm the Chief Executive Officer of BT Financial Group, which Asgard is a part of, and I'm the host of today's meeting. Joining us today we have the Chair and Directors of the Trustee Board, members of our executive team, as well as representatives of our superannuation fund actuaries and auditors. I'd like to begin by acknowledging the traditional owners on the land of which we are meeting, the Gadigal people of the Eora Nation, and pay my respects to elders both past and present. I'd also like to acknowledge and pay respects to those joining us today who identify as being Aboriginal and Torres Strait Islander and recognise the diversity of Indigenous peoples, communities and culture in Australia. Today's meeting gives us an opportunity to have a conversation with you, our members, to share what's been happening in our superannuation business and provide you with an update on how some of our investment options have performed and offer perspectives on the year ahead. It also gives you a chance to ask questions about the topics that matter most to you when it comes to your super. The first part of this meeting has been recorded and will feature video updates from Gai McGrath, who is Chair of the Trustee Board, and Corinne Collicott, our Chief Investment Officer, as well as a business update from myself as CEO. Your pre-submitted questions have formed the basis of these updates, so thank you to everyone who sent through questions. Each of the speakers, as well as the board and our representatives of our actuaries and auditors, will be available today to answer your questions during the live Q&A section later in the meeting. Now, if you didn't pre-submit a question, don't worry. You can ask a question at any time during the meeting by simply following the steps on your screen now. Just type your question into the text box next to the video screen and click the submit button. If your question today is about your own account or personal circumstances, we of course won't be able to cover this in a public meeting like this. But if you contact our customer relations team directly, they'll be very happy to help you with it. And just a reminder that if you have a financial advisor, they're always your first point of contact for questions you have about your super or any advice you need on your superannuation strategy. Now, before I introduce our first speaker, I'd like to share a few thoughts. BT has a strong and proud history, taking care of superannuation for members like you for more than 50 years. Whether you're starting your working life, building your super, or thinking about life after work, or even enjoying your retirement, BT has been here to help you grow and protect your savings by supporting you through moments that matter. I joined the business last year in October 2021, but I've been working in financial services and wealth management businesses now for more than 25 years, most recently as CEO of Allianz Australia Life Insurance Limited, and prior to that for many years with the Macquarie Group. As you know, BT is looking to separate from the Westpac Group, so it's an exciting time for me to be in this role as we set our future up outside of Westpac. BT is in the lives of more than 1 million Australians, and I see this transition from Westpac as both an enormous privilege and an exciting opportunity, as do the whole team. While everything is still on the table, We are currently looking to do this in 2 tranches. First, we've already started a process of looking at market interest in our non-advised superannuation products, which I'll explain shortly, and we hope to have an outcome for within the next 6 months. Second, we'll shortly start a separate process for our financial advice-based superannuation and broader investment platform businesses, and that is expected to take a little longer to reach an outcome. Now, regardless of the outcomes, BT has had many different iterations over our 50-year history, and all have played an important role in framing who we are today. So the prospect of new ownership is invigorating, and I look forward to leading this organisation into the next exciting chapter, developed with the people who use our products and services at the centre of the way we do business. Today's meeting is for members of a number of superannuation products that we manage that are issued under a superannuation fund with a rather unusual name. That name is the Asgard Independence Plan Division 2, and you can see a list of the products in that plan on your screen now. Because each superannuation product has different features and characteristics, it's important that you understand which one your super is in. Some parts of today's meeting are more relevant to some products than others, so we will try and be as clear as we can to provide today's update. To assist with that, I'd like to take a little bit of time up front to help you understand our products. Typically, members join our Asgard superannuation products in one of 2 ways, either through their employer or through their financial advisor. Around half of our Asgard super members join via their advisor, and if you're one of these members, you'll probably be invested in the Asgard Super Account, Asgard ERAP, Asgard Infinity ERAP, or Asgard Elements products. If you joined Asgard through your current or past employer, you will probably be in our Business Super product, Asgard Employee Super, during the 2021 financial year, but this product's now been closed, and we'll talk more about this later in the meeting. But if you aren't sure which super product you're in, I'd suggest you check your most recent super statement, log into your account online, give us a call, or speak to your advisor if you have one. Now, I'd like to introduce our first speaker, Gai McGrath, Chair of the Trustee Board. Gai was appointed as Chair with effect from 1 July 2021, following the retirement of our former Chair, David Plum, after more than 10 years of service. Gai brings extensive experience to her role as Chair, with more than 23 years as a Senior Executive in Australia and New Zealand, mainly in financial services. Her extensive career means she's eminently well equipped to take on this important role as Chair of the Trustee Board. Welcome, Gai, and thanks for joining us today.
Thanks, Matt. I'd like to also wish a warm welcome to everyone joining us for the annual members meeting. It makes me very happy to see so many members showing an interest in their retirement savings by registering for this meeting. As one of the largest financial assets many Australians will hold, it makes good sense to devote time and attention to understanding how your super works and how it's tracking. As Matt mentioned in his welcome, the annual member meeting is an important forum for super fund members. It's your meeting and a great opportunity to find out more about your super. We've based what we will talk about today on the questions that you, our members, sent through to us before the meeting. Today I'll be covering a look back at financial year 2021, the role of the Trustee Board, our key strategic priorities and challenges we've faced, and our approach to sustainable investing. So firstly, touching on the 2021 financial year. It was without a doubt another remarkable year for all of us, as the pandemic continued to change our lives both at work and at home. But throughout the ups and downs and the many changes, the team which manages our Asgard super products was there for our members, working hard to keep you informed and to help you understand and make the most of your super and supporting the advisors that support you. It's quite amazing to look back, and we're pleased we could be there to support our members when they needed it, whether it was through insurance support by paying out millions of dollars in claims to members and their families when they needed it most, financial support with early release of super payments to members to help them make ends meet during the pandemic, priority care and support for our most vulnerable customers, health support to members using our My Wellbeing program, and educational support by running webinars and providing tools and tips to help members better understand and take action on their super. This is why we do what we do. Now, I suspect many of you aren't clear on why your super fund has a trustee board and what we actually do. So I'd like to take some time to explain a little bit more about the trust structure and the responsibilities of the trustee board. In Australia, all superannuation funds are set up and operate under a trust structure, governed by a trust deed where the trustee holds assets on behalf of and for the benefit of members, and operates under strict laws around how the trustee manages funds on their behalf. The trustee is ultimately responsible for the sound and prudent management of the fund and must have a business plan in place outlining the trustee's strategic objectives and key activities to ensure positive outcomes for members. The overriding duty of the trustee board and each director who sits on the board is to act in the best financial interests of fund members, and this takes priority over any corporate or commercial considerations. In that context, I wanted to touch on what Matt mentioned in his introduction. Westpac's announcement that it does not consider itself the long-term natural owner of the superannuation business. The trustee board and I are absolutely committed to delivering the best outcomes and returns for our members long-term. I want to assure you that the trustee board is considering all options to ensure a long-term sustainable fund in our members' best interests, and we look forward to a positive outcome soon. Our trustee board comprises 5 independent, non-executive directors who bring their own skills, experience and knowledge to their roles. I was appointed as chair of the board last year. Our other board members are Robin Burns, Michael Cottier, Doug Carmichael and Anne Anderson. Robin, Michael, Doug and Anne will be available to answer your questions later in the meeting. It was a great honour for me to be appointed to the board, and even more so to the role of chair. Acting on behalf of so many members is a big responsibility, and it's one that I take very seriously. But at the same time, it feels like something of a homecoming for me, having worked at BT for over 7 years earlier in my career, including several years leading the BT and Asgard customer service teams. Now, as I just mentioned, one of the roles of the trustee board is to put in place a strategy and business plan, setting the framework for the operation of our super funds. We plan for a 3-year timeframe and review the plan at least annually to make sure it stays current and appropriate. Many factors are considered during planning and review, but without a doubt, 2 of the most important are whether our strategic objectives and initiatives will promote the best financial interests of our members and support our vision to help our members confidently grow and protect their superannuation savings as they move towards and through retirement. Our current plan is for the 3 years from July 2021. It includes 7 strategic objectives, with each objective having a number of initiatives which support it. I'd like to call out a few of these initiatives that might be of the most interest to members. The first is simplifying the business. This has been an area of focus for us over the past few years. We've already taken big steps on this to date, significantly reducing the number of trustees, products and systems, and we expect to complete this initiative by the end of the 2024 financial year. Some of you at today's meeting may have moved products as part of this simplification. This includes over 70,000 former Asgard employee super life stage members who were moved across to our more contemporary BT Super product late last year. If you are one of these members, I do hope you found access to the more modern, easy-to-use technology has helped you to stay in touch with and take action on your super. And a smaller group of around 10,000 former Asgard employee super members who had their super moved to the Asgard super account late last year to ensure they maintained the level of investment choice they'd previously had. Which leads to the second initiative I wanted to cover, reviewing our fee structures for some of our key products. Reducing fees for the Asgard suite of super products has been a big focus for us across the 2021 financial year, and our simplification program has contributed to this. Many members have benefited from reductions in administration fees on a number of products, and we've also removed advisor commissions on all our Asgard superannuation products. Matt will share more detail on these changes in his update later in the meeting. The third strategic focus area I wanted to mention was investments. Investment returns for members are obviously a big focus for the Trustee Board too. So our investment committee pays close attention to investment strategy and returns. Our Chief Investment Officer, Corinne Collicott, is speaking next, so I won't go into too much detail on returns. But I wanted to commend the team for the work that's been done in reviewing our investment strategies and investment options to ensure they continue to meet the needs of our members and deliver appropriate returns. There are many measures of success for these investment options. However, one that is important to the trustee is the investment manager's ability to meet and exceed the fund's stated long-term return objectives. I am pleased to say that all of our life stage options have exceeded their short, medium, and long-term objectives out to 10 years. The 2021 financial year was particularly good for many of our members. Members in the Asgard life stage investment options, where many of our members were invested during the year, saw record returns as high as 25%, the strongest 12-month returns since these options were launched in 2014. Corin will cover returns in more detail when he speaks. As part of the planning process, we look at both what went well and what didn't, as it's important to tackle challenges that have arisen. I wanted to address one of these today, the outcome of the government's new Annual Performance Assessment, or APA. The APA is a new annual test set by the government for default MySuper funds, which for us is our BT and Asgard life stage funds. Disappointingly, our life stage options did not pass this assessment, partly because of historical benchmark underperformance which occurred more than 5 years ago. If your super was in one of our life stage funds, we contacted you in September last year to explain what this meant for you and what we are doing about it. I want to assure you that the trustee and the super business have taken this very seriously. We've worked hard to improve investment outcomes for members in these products and are seeing the result of this in more recent performance. As I mentioned earlier, this year we've seen some of the strongest annual returns for these funds since their launch. I can assure you we'll continue to look for ways to provide better performance outcomes for our members by reviewing our investment strategies, our fees, and our services. I've asked Corin to talk more about what his team is doing to ensure we deliver strong returns to members ongoing. The final topic I wanted to cover is sustainable investing, including how we approach issues like climate change and human rights when making investment decisions. Judging by the number of questions we've had on this topic, it's pretty clear many of our members are passionate about these issues and want to know that their super is invested responsibly. I'm proud to say that we've been taking sustainability issues into consideration for a number of years. We were one of the first Australian signatories to the UN-backed Principles for Responsible Investment in 2007. In fact, we were recently named as one of the 13 leading responsible investment super funds in the 2021 Responsible Investment Association Australia Super Study. When it comes to sustainable investing, we believe, firstly, that a sustainable approach to investment is fundamental to providing long-term values for our members. Second, that over the long term, managing key environmental, social and governance factors has the ability to positively influence our members' retirement outcomes. And finally, that providing super members with clear, relevant information about our approach to key issues, like how we approach high carbon emitting companies, or action we are taking to understand and address modern slavery issues in our portfolios, is fundamental to helping members make informed decisions. We know climate change is an area of particular interest for many of our members and also to the board. BT supports the transition to a net zero emissions economy by 2050. We recognise that not only will this transition to net zero require significant transformation, but that a more orderly and well-planned transition path to net zero emissions will allow for better management of climate-related risk. This is critical for investors like BT, with investments across every sector and in many countries. For those of you who are particularly interested, I'd encourage you to read the sustainable investment information available on the BT website, which includes climate change disclosures and statements on modern slavery. Before I hand back to Matt, I'd just like to leave you with a final thought. As trustee, we know that we're responsible for growing and safeguarding your hard-earned retirement savings. Thank you for trusting us with this responsibility. I want you to know that you, our members, are at the core of every decision we make as a board. Thank you for your time, and I look forward to answering your questions during the live Q&A.
Thanks, Gay. We'll get you to join our panel at the end of the meeting to take questions from members, but now it's time to hear from our second speaker, Chief Investment Officer Corin Collicott. Corin has been working in investment management space for more than 20 years. He joined us in 2015 after 9 years leading the investment strategy team at Sun Super. Corin leads a team of 22 investment professionals who are responsible for the investment strategy for over $44 billion of superannuation, mainly for members in the life stage investment options. Thanks for joining us today, Corin.
Thanks, Matt, and hi, everyone. It's great to be here today and to have the opportunity to talk to our members. My team and I are passionate about investing and investment markets, and managing your retirement savings is a responsibility we take very seriously. Now, I know that many of you are very interested in how your super is invested, and we received a lot of questions in this space ahead of today's meeting. So, I hope you find my update interesting and useful. Before we get started, one thing I should mention to our members with advisors here today is that some elements of what I cover today may not be as relevant to you, and as Matt indicated, we always recommend that you speak to your financial advisor regarding investment perspectives in the first instance. There's 4 areas I wanted to cover with you today. I'll start with an overview of what happened in investment markets for the year to June 2021. Then, I'll talk you through the super performance returns for the year with a focus on the life stages funds. I'll cover our approach to sustainable investing, and I'll finish up by sharing our investment outlook for the coming year. So, Let's now take a look at what happened in investment markets for the year ending June 2021 and what that meant for the various asset classes and returns. If we take a look around the globe, it's clear that the impact of COVID-19 was sudden and unexpected. There was initially a decline in consumer and business spending and sentiment, but we began to see positive signs of a steady economic recovery towards the end of that financial year. This was largely a result of ultra-low interest rates and record levels of government spending to stimulate economies and to support employment. This, along with the hope of vaccines being available and rolled out globally, were the key reasons for the positive way markets reacted, particularly towards the end of the financial year. In the US, for instance, the Biden administration announced what was ultimately a US $1 trillion spend on infrastructure. And locally, we saw around $300 million spent on JobKeeper and JobSeeker payments to keep businesses open and workers employed. Most major share markets rose over the 2021 financial year, with several hitting record levels as economies headed back towards pre-COVID-19 levels of growth. In particular, the Australian and US stock markets both experienced extraordinary record-breaking rebounds. If we expand on this, and turning to the different asset classes, we can see that growth assets such as shares and property had a great year. And given the relatively low cash rates globally, defensive assets such as traditional fixed interest returns were weak. However, it's important to remember that cash and fixed interest assets continue to play a valuable defensive role in a diversified investment portfolio, where they can serve to cushion against unexpected market downturns like the one we saw in March 2020 when COVID first hit. In short, the 2021 financial year was good for many of our superannuation members. Today, I'm going to focus on the performance of the Asgard MySuper Life Stage investment options, as this is where about half of our Asgard members were invested. If you take a look at the slide on the screen now, you'll see the performance returns for our Asgard Life Stage members for the year ending 30 June 2021. Our Life Stage members, who were born in the 70s, 80s, 90s and 2000s, have around 90% of their super invested in growth assets like shares and property. So you can see they really benefit from the strength we've seen in the share markets during 2021, with fantastic one-year returns of around 25%, and that's after fees and taxes. As you can see, these life stage options have also performed strongly over the medium and longer term, delivering returns of between 9 and close to 10% over 3 years and 5 years, respectively. Our life stage investment options for members born in the 40s, 50s and 60s are designed to gradually reduce members' exposures to risky assets over time, with the aim to protect their balances during periods of volatility and negative market events, which is exactly what we saw last year. With a much lower proportion of their money invested in growth assets like shares and property, and a higher proportion in defensive assets like cash and fixed interest, you can see that the one-year returns for these members were still strong, but not as high as those for the younger life stage groups. Our 1960s fund, which is around 60% invested in growth assets, had a strong return of 16.8% for the year. And the 1940s and 50s funds for members nearing or in retirement, which have around 35 to 40% invested in growth assets, saw returns ranging between 8.2 and 10.2% for the year. With most of the Asgard Life Stage members transitioning to the Life Stage investment options in the BT Super products late last year, I thought I'd also share how these options have fared since the end of the last financial year, as we've now got December 2021 return results for these funds. We've seen a continuation of recent strong returns, with our younger members in the 70s, 80s, 90s and 2000 options receiving returns of around 16.5% for the 12 months to 31 December 2021. And the members in the 40s, 50s and 60s options saw returns ranging between 4.9% and 10.7% for the same 12-month period. Now, for those members who've selected their own investments or who have worked with their financial advisor to create a customised investment strategy, how your supers perform during the 21 financial year will very much depend on what investments you or your financial advisor has selected for your portfolio. And while I'd love to be able to talk about investment returns for all of the other options, we don't have the time to do that today. But if you do want to find out more about how your super has performed, I'd suggest you speak to your advisor if you have one, take a look at your latest statement, or check the Asgard website. I wanted to talk a little bit today about our approach to sustainable investing, which, as Gay mentioned, is something we've been focusing on for a long time. Sustainable investing is founded on the idea that well-run companies, those that better manage issues like climate, labour and industrial relation policies, not only perform more consistently, but are also less exposed to policy changes, reputational issues and market shocks. So, what does this mean for you as a super member? It means that when we're making investment decisions on your behalf, we don't just look at the financial performance. We also look at the possible long-term impact on performance of those investments on issues like carbon emissions and workforce diversity, as well as how the company might impact the broader community. For example, when your super is invested in our MySuper life stage investment options, your money is not invested in shares linked to tobacco products or controversial weapons. But it's not just about what we do and don't invest in. It's also about how we use the opportunity afforded to us to positively engage with the companies we invest in, encouraging change in areas that will make a difference and benefit their long-term performance and value. And it works. Over the past 5 years, BT has been involved in initiatives that have seen more than 110 of the biggest corporate greenhouse gas emitters, including Australian companies like BHP, Woodside, AGL and Origin, make net zero commitments and improve the information they disclose about climate change. We've also seen money invested in renewable energy and new technologies like green hydrogen and in sustainable agriculture. But climate is not the only issue our team looks at in this space. For example, we know that human rights issues plague many industries and products, often as a result of the demand for cheaper and faster production. This year, we've joined an initiative to work with other investors and the companies we invest in across the Asia-Pac region to understand where, why and how the assets we invest in might be exposed to issues like slavery and human trafficking. And our aim is to use our influence to reduce the chances of people being forced into slavery-like conditions. Ultimately, we believe that a sustainable approach to investment is fundamental to providing long-term value for those that invest with us. And, encouragingly, we're seeing more and more money flow to strategies like ours that embed the consideration of these factors into investment decisions. If this is a topic that interests you and you'd like to find out more about our approach and the specialist sustainable investment options in each of our super products, you can find more information on the BT website or speak to your financial advisor. So, let's look ahead now at what we think you can expect from investment markets in 2022. Your financial advisor will also have a view on this, so if you have one, you should speak with them about this as well. Well, it's clear that the year ahead will be one of transition as the world readjusts to living with COVID. As well as the ongoing impact of the pandemic, we think there's probably 4 key investment themes to watch for in the year ahead. The first theme I wanted to talk about is inflation and interest rates. Now, a moderate level of inflation is good for investment returns because it reflects positive growth and demand dynamics, signalling corporate profitability and broader economic prosperity. However, there's ongoing uncertainty about the core drivers of inflation, and we think inflation is likely to be higher and more volatile over the next 2 to 5 years than it has been during the previous 10 to 20 years. Overall, we expect interest rates to start to rise as early as mid-2022 because it will be difficult to maintain the current low interest rate levels when countries are operating at more normal activity levels. Our next theme is China's growth story. China's extraordinary growth and development since the 1980s is always a hot topic, but more recent events, such as the need for China's government to inject liquidity into the financial system, has caused us to take a closer look. China's growth is slowing, and when combined with high inflation, worse fiscal deficits, and greater geopolitical volatility, it's one to watch carefully, including the impact on commodity prices, which are particularly important to Australia's economy. The third theme is supply chain concerns. The recent surge in energy prices in Europe due to low stock, high Asian demand, high carbon prices and supply chain bottlenecks and outages has threatened to generate even higher oil and gas prices. But as countries reopen and global economic activity returns to normal, our view is that the mismatch between supply and demand for goods should start to level out. And our final theme is climate change. Since the United Nations Climate Change Conference, COP26, there's been a spotlight on the journey to net zero. The Australian government committed to cut emissions by 26% below 2005 levels by 2030 in its effort to reach zero net emissions by 2050. But other countries took a more aggressive stance towards their net zero goals, which could see sectors like technology receive additional investment as new green policies and strategies emerge. Overall, this has and will change the investment landscape and the social dynamics to how we live and consume and invest. To wrap up, given the uncertain outlook, diversification across different markets and asset classes to minimise the impacts of single economic or market events is as important as ever. As the past few years have shown, predicting the future is difficult and not getting any easier. But what it's strengthened in our minds is that avoiding panic and sticking to process is what provides the best chance of hitting long-term investment goals, regardless of short-term shocks and market volatility. Well, that's all from me, but I'll be back later to answer your questions during the Q&A. So now I'll hand back to the CEO, Matt Rady, for his business update.
Thanks, Corin. I'm sure members found your investments update really helpful, and it's probably prompted a few more questions for you during the live Q&A, so it'll be great to have you join the panel at the end of the meeting. Now, I'd like to provide an update on behalf of the business and share some of the work that's being done to support Asgard members during the 2021 financial year and since that time. Firstly, I'd like to explain some important recent changes to super. I'll then provide more detail on some of the initiatives the Trustee Chair mentioned earlier, like our business simplification program, before touching on some of the enhancements we've made for members. There's been some significant government changes to rules around super, which came into effect last year. These could have a big impact on your super savings, so it's important that you understand what's changed and what this means for you. From 1 July 2021, the amount that your employer needs to pay into your super under the super guarantee has increased from 9.5% to 10% of your salary each year. At the same time, there's also been an increase to the concessional and non-concessional caps. That is, the maximum amount that you can contribute to your super each year. Now, I won't go into the detail of these changes as they are complex and everybody's circumstances are different. But generally, these changes are good news as they could mean that you have the ability to contribute more money into your super, which could make a big difference to your super savings over time. Another important change which came into effect in November last year is the government's stapling rules. These mean that your super fund now moves with you from job to job unless you tell your new employer otherwise. This makes it more important than ever to take the time to understand your super, the fees you're paying, how it's invested, and very importantly, the insurance you have in your super. Now, we do our best to keep members updated on these sorts of changes through our regular email newsletters, social media, and educational webinars. So keep an eye out for these. Or head to the BT website where you'll find more information. Now, as the Trustee Chair mentioned earlier, the business has been working through a major simplification program. Last year, we moved around 70,000 of our members invested in the life stage investment options from Asgard Employee Super, a product we've now closed, to BT Super. As a result of this move, these members will enjoy a contemporary digital experience for their superannuation, which includes enhanced desktop interface, better functionality, improved accessibility with the BT app, allowing them to manage their super better when it suits them on their preferred device. Now, if you're one of these members, you'll also have been invited to the BT Super annual member meeting being held at 5:30 p.m. tonight. If you can't attend, you'll be able to view a recording on the BT website in the next couple of weeks. Around 10,000 of our other members in the now closed Asgard Employee Super product, who have chosen their own investments and had more complex selection of their investment options, were transitioned across to the Asgard superannuation account. This product better suited their investment needs as it continues to provide a very broad selection of investment options for the future. We've already seen significant operational simplification. For example, we've reduced the number of licenses, the number of products, and the overall number of funds, all of which have enabled us to identify cost savings to pass on to members. Over the past year, aligning the fees for existing Asgard members with our newer Asgard Open pricing has been a focus. This alignment has benefited members in ERAP, Asgard Elements, and Asgard superannuation accounts, and has included administration fee reductions and rebates. The administration fees for members of our Asgard Element accounts and Asgard superannuation accounts were lowered in December 2020 by up to 31% and 50% respectively. And for those Asgard Employee Super Life Stage members who moved across to BT Super from 1 February this year, we've reduced their dollar-based administration fees by almost 50%, from $108 to $56 per annum. This followed an earlier fee change in October 2020, which resulted in most members paying either the same or lower fees. That change benefits around 470,000 members and sees almost $20 million back in their pockets to help them grow their super and reach their retirement goals sooner. Now, we've also continued to enhance our product offering this year to provide more choice for you, our members. This has included the addition of 40 new managed funds and 134 ASX-listed securities to our investment menus, which means there are now over 740 investment options and 3 new income protection insurance products for Asgard members to invest in, with the support of their financial advisor. And just in closing, as I mentioned in my opening, we've started a process to separate the non-advised super products business and the financial advice-based superannuation products and broader investments platform business from the Westpac Group, and we'll share more news on what that means for members when we're able to over the coming year. No matter what the outcome, our passion is to help you grow and protect your savings and support you through the moments that matter, and that doesn't change. That wraps up the business update section for today. So let's move on to our final session, the live Q&A. So it's now time for today's live member Q&A section of today's meeting. And joining us today are the directors of the Trustee Board, Gai McGrath, and the directors that Gai mentioned earlier, Robin Burns, Michael Cottier, Doug Carmichael, and Anne Anderson. I'll also be available to answer your questions together with Corin, Andrew Wallace, Kathy Vincent, our auditors and actuaries. And a number of people have already submitted quite a few questions, which is really good to see. A quick reminder, ask your questions by typing into the question text box next to your video screen and clicking the Submit button. The instructions to do that are on your screen now. We'll get to as many of these questions as we possibly can, but if we can't get to those questions, we'll publish the answers online later this month. And just a reminder, in today's meeting, we're not able to provide any personal advice or answer any personal questions. So if you have any of those, please call our customer relations team. And if you pre-submitted a personal question before this meeting, we've passed your question on to our customer relations team already, and they are already contacting you to assist. So, our first topic, which is always a very hot topic with our members and never more so than right now, is investments. We've looked at the member pre-submitted questions when deciding what to cover in our presentations today. Hopefully you found those presentations useful and those presentations covered the majority of your questions. Corinne Collicott, our CIO, has joined me today to help answer questions about investments that have come through from members that we didn't cover earlier. And just a reminder, if you have a question you'd like to send through to Corinne on investments, please do that now. Our first question, Corinne, comes from Dutrin Elizabeth, and she's wondering, how is COVID affecting the market? That's a similar question to a question that Barry asked. How do you see the fund performing over the next couple of years due to the ongoing COVID and market uncertainty? And I think perhaps it's also most important today to comment on the impact of the humanitarian crisis that's going on in the Ukraine, noting first and foremost the tragic human situation that is unfolding. Corinne.
Thank you, Matt, and thank you for the question, Dutrin and Barry. Just reflecting on the update I gave earlier and reminded of how quickly things can change on global terms and then how they affect what we do on your behalf in your portfolios. So I thought I'd answer the question in three parts today. Firstly, just cover off on COVID and an update to early 2022, make some comments on the conflict in the Ukraine, and then finish off by talking about what we're doing in our portfolios in reaction to events that are unfolding. So firstly, we'd like to describe the state of the investment markets in early 2022, contrasting with what came before then. And if we think back to the end of 2021, large parts of the world were in advanced stages of living with COVID. This was a result of successful rollouts of vaccines across the globe, low interest rates from monetary policy from central bankers, and also government spending across the globe that created an environment of low interest rates and high liquidity. Markets have reacted favourably to that environment, which is why we've seen investors with very large returns in recent years, and you could see that in the numbers that I talked to earlier today. However, when we think about what were happening in markets in January and February, it's clear that we were seeing heightened risk and volatility in reaction to an emerging risk that we haven't seen for quite some time, and that's inflation. Inflation in the short term, where what we're seeing is that the demand for goods and services is being outpaced by the ability for companies to supply them, creating price pressures in the short term. And as economies are opening up around the world, we're also seeing low unemployment rates and rising wage pressures, giving us the suggestion that inflation is not just short-term, perhaps also a medium and long-term risk. In response to those risks, what we saw earlier this year was central banks effectively signalling that they were going to raise interest rates around the world in larger amounts and sooner than previously guided. Now, we know that asset prices are very sensitive to inflation rate and interest rate changes. And I think at the beginning of this year, what we were seeing were investors seriously contemplating that the investment outlook in terms of inflation and interest rates for the next 10 years would be very different to the one earlier. Now we turn to events unfolding in the Ukraine. And firstly, I'd like to say that how these events will play out and exactly what the reaction to the sanctions being imposed will be is unknowable. History tells us that such conflicts usually in the early stages, are seen by large falls in volatility across asset markets. And we've already seen that with very large price falls in Russian shares, Russian debt, and the ruble. We've also seen volatility in other major markets, most notably in Europe. It's also the case that history tells us that such conflict is inflationary. And if we think about the supply of energy and oil and gas from Russia into Europe, we think this is something that will definitely play out. Effectively, what that means is, given the earlier comments I made about the states before the conflict, is that raising interest rates by central banks in this environment is even more challenging than we thought before. And in turn, that means it's likely that we see markets remain volatile for some time to come. If we think about what we're doing now, first I can tell you that the total exposure we have in aggregate across our super portfolios managed by my team is less than 0.2% in total, so relatively small. We are speaking to our fund managers that hold securities in Russian debt and Russian securities to make decisions on what to do with those securities as events unfold, and we're already seeing divestment by some of our managers in the first instance. It's also something I should point out that we have the systems in place to make sure we comply with any sanctions that we're obliged to attend to. When it comes to thinking about what else we might do to the portfolios, we remind ourselves and we remind you that superannuation is how we invest over the long term for the long term, and that we design portfolios to be able to withstand these kind of market adverse reactions and events like COVID in 2020 and like we're seeing right now. And that makes us avoid trying to second guess what's happening in markets and potentially doing damage to long-term balances for our members. Finally, I'll finish by just reminding everyone that for those members in our life stage options with shorter time horizons to retirement, the life stage options have you exposed to less risk assets, which means we can still expect to withstand the shocks we're seeing now and still be confident of meeting our investment objectives over their time horizons. Thanks, Matt.
Thanks, Corin. So overall, for those members who invested in our life stage investment options, a very, very small exposure to Russian equity and debt markets. Corin, we might turn to another question which is often comes up, and this is in regards to some of the newer asset classes or perhaps some commodity assets. And so Anthony would like to know whether Asgard will be investing in crypto in 2022, any gold and silver mining, and anything to do with uranium. Corin.
Thank you for the question, Anthony. One we get very often. And perhaps I'll deal with the crypto piece first and then the precious metals as a second part of the answer. When we think about strategic allocations to the portfolios we manage on your behalf, it's effectively an exercise of comparing the potential rewards from those strategies and the potential risks that come along with those strategies. In particular, we note that cryptocurrencies are very volatile, much more so than shares, and that's the first point to note. In addition, as institutional investors with large amounts of money, and also thinking about this from the point of view of many institutional investors, we would require to have deep and liquid markets. And while there are many cryptocurrencies out there, there are only a few that would fit this bill. When we think about risk from a governance perspective, we would also like to understand valuation models for the assets that we hold, confidence in the custody, and we would also like to understand the potential for market manipulation. In the case of crypto, we also have regulatory risk in terms of taxation and privacy. When we think about all of the risks associated with investing in crypto, we think they outweigh the benefits, and therefore we don't expect to have crypto in our portfolios in 2022. Now, just turning to the other part of the question, what we can say is we do have exposure to mining companies, and a good example of that is BHP. And I'll take a moment just to say, for other members that are interested as well, that investing in mining companies also has to comply with our sustainable investment policies. And so underlying managers are required to consider the environmental, social and governance risks associated with mining companies. In addition, we also engage directly with those companies, understanding these risks, paying attention to climate risk in particular, and encouraging disclosure, especially plans on reducing emissions to net zero by 2050. Finally, on contentious matters, we might also vote at the AGMs for those companies. Effectively, what we're saying there is that we have indirect exposure to precious metals, and from a total portfolio perspective, we believe that our allocations to Australian equities and assets gives us sufficient commodities exposure in the portfolios, and so we don't have a direct exposure to precious metals. Thank you, Matt.
Thanks very much, Corin. I'm going to turn now to a separate set of questions which focus more on our superannuation strategy and some of our investment performance, which Corin in particular touched on earlier. And I think this is a topic that is another hot topic from members. The first question I'll ask of our chair, Gai McGrath, and it relates to Asgard's overall performance, and in particular the role that the board plays in monitoring performance. Alan asks, if there isn't an improvement in Asgard's investment performance, will the board resign? Gai, I'll ask you to cover that question.
Hi, Alan. I mentioned earlier in my speech how the board takes its responsibilities for the sound and prudent management of the fund very seriously, and that we have an overriding duty to, at all times, act in promoting the best financial interests of our members. We are conscious of the need to balance a long-term view as our members save for their retirement with the need to plan our strategy over a 3-year cycle, and we mentioned some of the initiatives that we've put in place over the past 3 years. In particular, the simplification regime that has enabled us to identify and pass on cost savings to members by way of lower fees. And also, Corin spoke about the work he and his team have done to improve investment performance, and you will have seen that in recent times. So overall, it really is important for you to understand that the board at all times is very conscious of focusing on the needs of our members over their long-term working lives as they're contributing to super. And we want to make sure at all times that every decision we make balances those long and short-term objectives and continues to promote the best financial interests of our members.
Thank you, Gai. I'm going to turn now to a question which leads to the simplification strategy which Gai talked about as part of our business plan. And to answer this question, I'll turn to Cathy Vincent, who is the Managing Director of our platforms products. James asks, why has Asgard closed Asgard ERAP, Asgard Infinity ERAP, and Asgard Elements? Cathy.
Thanks, Matt. And yes, we have been talking about our simplification journey, and you also did mention how our Asgard members are actually part of a super fund called Asgard Independence Division 2. Now, what we are contemplating is actually a transfer of our Asgard members into another BT super fund called Retirement Wrap, and in doing so actually transitioning members into and creating one of Australia's largest retail super funds with about 128 billion in assets. In doing that, what we'll make accessible to Asgard members is actually further capability in digital features, mobile apps and solutions to actually help members with their investments.
Thanks, Cathy. We've also got some topics which are more general in nature and come through on the products we offer and general member services, and I'll get to some questions on that at the moment. In the first instance, I'll ask Cathy Vincent, who, as I mentioned, is the Managing Director for our platforms products. Those products are typically used if you have a financial advisor to answer these questions, and these products typically are Asgard ERAP, Asgard Elements, Asgard Managed Profiles, separately managed accounts. Cathy, Dutrin Elizabeth is wondering, how can she change the way her super is invested?
Thanks for the question. In part, it does depend on whether you have a financial advisor. But if you do have a financial advisor, we'd strongly suggest you talk with your financial advisor and actually determine what's the right changes to your superannuation investments for you. If you don't have a financial advisor, you can actually pop online and on your account investigate your investment options and your solutions and make the necessary changes to your investment strategy. But we would always encourage you to seek advice from a financial advisor. Thanks, Matt.
Thanks, Kathy. And for those of you who are interested in finding a financial advisor, a great place to start for that is the ASIC Money Smart website, which helps provide some guidance on how to select a financial advisor. The next question comes from Mark. And Kathy, Mark asks, if he wanted to leave Asgard's fund, is it okay to do so, and what are the fees involved?
Thanks, Mark, for your question. Importantly, we don't actually charge any exit fees to actually transition your money from our superannuation fund. But what you do need to consider is in doing so, there may be other transaction costs associated with moving your money from the fund. And these types of transaction costs can be associated with the underlying managed funds or equities that you might hold in your portfolio. So things like buy-sell spreads or brokerage costs. So it is always important to consider actually those costs as you make those types of decisions. And as always, we would encourage you to seek the advice of a financial advisor. Thanks, Matt.
Thanks, Kathy. Another question from a member, Stella, who has some questions about how to deposit and withdraw from your super account and how to connect your financial advisor to your account.
So thanks, Stella, for the question. Firstly, in terms of actually attaching a financial advisor to your account, we suggest you talk to either your financial advisor or give us a call and we can provide you with the necessary forms so that you can actually attach an advisor to your account. In terms of actually depositing funds, there's many ways to actually deposit funds into your account. We recommend you give us a call or, again, talk to your advisor. In terms of withdrawing funds from your superannuation account, there are certain things that you do need to consider, and in super they're called conditions of release. They might be associated with actually certain parameters around actually what is called your preservation age. So actually whether you've reached a certain age between 55 to 60 and have retired, or in fact if you actually achieved age 65 and not retired as yet. There are other circumstances as well within super where there's matters relating to financial hardship. So we'd always suggest that you talk to a financial advisor or call us for information around these conditions of release. Thanks, Matt.
Thanks, Kathy. And there is a question that's come through from a member online, David Duncan. David would like to understand the rationale behind the significant reduction in TPD insurance premiums within the super policies. Kathy, can you help David with that question?
Thanks, Matt, and thanks for the question, David. So we do actually work actively with our insurer and considering matters like premiums, insurance coverage, and actually the claims experience within the insurance policies. And what was pleasing was within the Asgard personal protection package, in doing so we were able to actually offer a majority of our members a reduction in premiums. This premium adjustment actually was effective from the 21st of February this year. Thanks, Matt.
Thanks, Kathy. So I think at this point we're close to getting through the questions that have been submitted either during the meeting or pre the meeting, and I'd very much like to thank those of you who have taken the time to submit questions. It really is great to hear what's on your mind, and I do hope that we have been as helpful as we possibly can be today. As I mentioned earlier, towards the end of the month, we'll publish a video on today's meeting together with the minutes and all of the questions and answers on our website. Answers to any questions, hopefully, in that will be quite comprehensive. We'll also be sending you a follow-up email after today with a short feedback survey, and we'd really appreciate it if you could take the time to let us know what you think about today's meeting, what you liked, and how we can improve for next time. The email will also have a link to a Learn section on our website, which houses a whole range of articles and videos, calculators on topics that can help you better understand and make the most out of your super. And finally, I wanted to say thank you to each of you and on behalf of our whole team for trusting us to help and protect and grow your superannuation. We're passionate about super and we value the opportunity to help you make sure that you can live your very best retirement. Enjoy the rest of the day, stay safe, and we hope to see you at another members event soon.